It is 9:42 a.m. Pacific Daylight Time. It is the last day of March, the 31st, 2025. This is episode 1065 of Bitcoin Andal, I do believe. Yep, 1065. It certainly is. And we're just going to jump right in. Probably going to be a shorter show today. Honestly, it's weird, but there's just not that much stuff going on, except Trump is getting into mining. This should be good. So Hut 8 partners with Trump-backed firm to launch American Bitcoin mining company. Naga Avon Namayo has it for the block. How involved is Trump actually in with this? I don't know, man. I think this is, when they say Trump-backed company, I'm like, you're just using the name. But publicly traded Hut 8 has announced a partnership with American Data Centers, whose investors include Eric Trump and Donald Trump Jr., to launch a new Bitcoin mining company, American Bitcoin. The deal expands the Trump family's corporate exposure to the cryptocurrency sector. Under the cashless merger, Hut 8 will own 80% of American Bitcoin and manage operations through a shared services agreement. The Trump-backed firm will hold a 20% stake, according to a Monday press release. Hut 8 will also deploy more than 60,000 ASIC machines to the new standalone Bitcoin mining business. Shares of the Florida-based company rose more than 6% in pre-market trading following the announcement. However, Hut 8 stock remains down 46% year-to-date as Bitcoin miners navigate revenue pressures following April's Bitcoin halving, a quadrennial event that cuts mining rewards by 50%. American Bitcoin's leadership team includes Mike Ho as executive chairman, Matt Prusik as CEO, and Eric Trump as, oh my God, the chief strategy officer. Hold the phone. Because as much as I don't know all that much about Bitcoin mining, it seems awfully weird that a mining company's chief strategy officer would be somebody who probably knows even less about Bitcoin mining than I do. I don't remember Eric Trump saying that he's been in the mines. I don't remember Eric Trump pulling apart an ASIC machine and cleaning out the fans. I certainly don't ever see pictures of him standing in front of a container with a whole bunch of ASIC miners in there, strapped up to natural gas and an electric motor running and him changing the air filters. I've never seen this. I'm not sure that this is a high quality decision on the part of American Bitcoin, but I guess you got to put the man somewhere. But Ho will also serve on the board alongside Justin Mateen, Michael Bruckham, and Hut 8 CEO Asher Genut. Quote, by carving out our mining business into a standalone entity, which will raise its own capital, we align each segment of the business with its respective cost of capital, Genut said. The partnership marks another move by the Trump family to expand its presence in digital assets. Quote, from the start, we've backed our conviction in Bitcoin personally and through our businesses, said Donald Trump Jr. Quote, simply buying Bitcoin is only half the story. Mining it on favorable economics opens an even bigger opportunity. End quote. The Trumps have also backed decentralized finance protocol World Liberty Financial, which plans to launch, the stablecoin, as the president and U.S. regulators push for clear crypto regulations. Additionally, the family was affiliated with two official Trump meme coins, both Trump and Melania, blah, 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 which have lost like almost all of their value. Please don't get into meme coins, ladies and gentlemen, no matter whose name is on the coin. They're all worthless. Please, for the love of God, stop. Otherwise, you're going to lose all your money. All right, so Strategy has bought more Bitcoin. If you did not know, and you probably did, they have bought another 22,000 Bitcoin for another $1.9 billion. Holy crap, James Hunt, the block. Let's see if there's anything different about this one. Bitcoin Treasury Company Strategy acquired an additional 22,048 Bitcoin for approximately $1.92 billion at an average price of $86,969 per Bitcoin between March the 21st or the 24th and March the 30th, according to an 8K filing. Strategy now holds a total of 528,185 Bitcoin worth over $43 billion, bought at an average price of $67,458 per Bitcoin for a total cost of around $35.63 billion, including fees and expenses, according to the company's co-founder, Michael Saylor. That's the equivalent of more than 2.5% of Bitcoin's total 21 million coin supply. 2.5%, ladies and gentlemen, is owned by one guy. Well, not Michael Saylor himself, but the company. And yes, that's actually kind of concerning. But what are you going to do about it? The only thing that keeps Michael Saylor from buying more Bitcoin is for other people to buy Bitcoin. And 2.5% is quite a lot of Bitcoin for any one person or company or entity, whatever you want, however you want to frame it. That's just too much. But again, there's not a damn thing you and I can do about it. So there you go. Now, the latest acquisitions were made using the proceeds from the sale of its Class A common stock MicroStrategy, or MSTR, and the perpetual strike preferred stock, STRK is its ticker. Last week, Strategy sold 3.64 million shares of MSTR for approximately $1.2 billion. As of March the 30th, $2.37 billion worth of MSTR shares remain available for issuance and sale under the program, the firm said. Strategy also sold 213,807 strike shares for approximately $18.52 million last week, with approximately $20.97 billion worth of STRK shares remaining available for issuance. Strategy's strike and strife perpetual preferred stocks are in addition to the firm's initial 21-21 plan, which targets a total capital raise of $42 billion in equity offerings and fixed income securities for Bitcoin acquisitions. So it seems that there's no less appetite for buying the debt of MicroStrategy so that they can take that money and go buy Bitcoin with it. I would have thought that would have kind of cooled off a little bit. So begs the question, is this really the only place, or rather, is the issuance of debt by private companies now the only visible, quote unquote, safe haven for investors? Housing is overblown. The housing market, all houses cost way too much money, entirely too much money. All right, so that seems to have petered out. Art, people aren't really buying that much art anymore. At least it doesn't look like it. Gold, now gold's doing well. Gold is doing well. Why not just buy the actual Bitcoin? And I am never going to have a good, high quality answer for you. And nobody's really going to be able to have an answer for, a really good, high quality answer for me. When I ask the question, why not just buy the Bitcoin instead of buying debt that's issued by a company in a very, very fiat feel? Like they're just issuing it. They're just like willing it into existence. And they don't even have to will it. They just have to print it. Somebody's just got to pick up a phone and say, issue more shares. Of course, you got to jump through a few hoops to be able to do it, but it ain't rocket science neither. So I don't know. I mean, I wish I had a better quality line of thinking for y'all, but I just don't. I find it flabbergasting to me that people really just want to buy the debt of a private company who's turned into a Bitcoin company and has essentially left the very goods and services that they were creating that made the company what it is behind. It's kind of baffling, but hey, you want to talk about covenants some more? Because Shinobi has a new piece about Bitcoin covenants, which he had promised he was going to do. This one is going to be the Check Template Verify, or BIP 119. And this is the first article in the Covenant series examining Check Template Verify, otherwise known as the CTV proposal from Jeremy Rubin. And like I said, it's written by Shinobi out of Bitcoin Magazine. Check Template Verify, or CTV, put forward by Jeremy Rubin with BIP 119, is the most mature and fully fleshed out covenant proposal, not only out of the proposals that we will be covering, but out of all the covenant proposals in their entirety. As I mentioned in the introduction article to this series, there are many concerns in the ecosystem regarding covenants that are too flexible, enabling things that wind up having very detrimental consequences for Bitcoin. CTV was designed specifically to constrain its capabilities tightly enough to avoid any of those concerns. To first understand how CTV functions, we need to understand the individual parts of a Bitcoin transaction. This is a very high-level view of a Bitcoin transaction. It has inputs, or unspent coins, also known as UTXOs, and it has outputs, the new unspent coins that the transaction will create when it is confirmed in a block. There's a lot more pieces we will go through, but this is the highest level view of a transaction's structure. Every transaction also has a version number field for the whole transaction, indicating applicability of new versions of rules or features. There is also the marker and the flag, which are set to specific values to indicate the transaction uses SegWit. After this is the input count, the number of inputs in the transaction. Then comes the actual inputs. Each input contains a TXID of the transaction that created the unspent coins that are being spent, a V out, which marks what output in that transaction is being spent, the size of the script SIG, and the script SIG, which may be twice, which is the unlocking script, proving the input being spent is authorized by its locking script rules. And finally, a sequence number, which is used to ensure the input being spent is following relative time lock rules. For example, the input has existed for a certain number of blocks or length of time since its creation. The output count is the next piece of data, the number of outputs in the transaction. After this comes the actual outputs, which contain an amount of Satoshis assigned to that output, the script pub key size, and the actual script pub key, which is the locking script for that output. Lastly, the in-lock time field applies a time lock value in the timestamp or block height that applies to the entire transaction. Each SegWit transaction also contains a witness section, where each input has a corresponding witness containing a stack items count, which how many things will be put in the script stack, a size field for each item, and the actual data item to go on the stack. So how does CTV work? CTV is an opcode that enables the most basic form of introspection and forward data carrying out all of the covenant proposals. It allows a script to take a predefined 32-byte hash and compare that against a hash of most of the fields of the spending transaction. If the hash derived from the actual spending transaction does not match the predefined hash, that transaction is invalid. The fields it commits to are inversion, in-lock time, input count, a hash of all the in-sequence fields, output count, a hash of all the outputs, and an input index, which is the place the input has in the transaction, like first input, second input, etc., etc. These are all the fields committed to by the CTV hash in their entirety and with no ability to pick and choose. This is the degree of introspection CTV enables. Quote, does the hash of these fields in the spending transaction match the hash in the locking script of the input being spent? That's it. The hash commits to essentially the entire transaction except the actual inputs. There's a reason the hash does not include the inputs. In order to lock an output to a 32-bit or 32-byte hash with CTV, you need to know the hash of the transaction that you are ensuring is the only way for it to be spent. The input locked with CTV being spent will have to include this hash in order to be verified against CTV. That necessitates having the hash of that transaction before you create the complete transaction. That is not possible. You can also nest CTV scripts, like for instance, have an initial CTV script commit to a transaction with outputs that also include CTV scripts. This is what allows CTV to, quote, carry forward data. All it carries forward, excuse me, in practice, though, is whatever data is contained in the chain of transactions. You can do this in theory to an infinite depth, but you are limited in practice to a finite depth because the nesting must be generated backwards starting from the end. This is because each level, or hop, must have the hash of the transaction moving to the next one. Otherwise, you can't create the locking script in the first place. If you don't already know the next transaction, you cannot generate the previous one. So what is this useful for? CTV allows you to restrict an output so that it can only be spent according to consensus rules by an exact, predefined transaction. Some of you might be asking what the big deal is. We can already pre-sign transactions. If the level of introspection is so limited that it can only accomplish something we can already do just pre-signing, what is the value add? First, pre-signed transactions always leave open the possibility of the key holders signing new transactions and spending those coins in a different way. You have to trust that the key holder will not do this, or will delete the key needed to sign with, which you also have to trust them on. There's a lot of trust involved in this, is what Shinobi's saying. CTV, though, removes that trust entirely. Once the spending transaction is defined and the output locked to that CTV hash is created, there's no possibility of being spent any other way, enforced by consensus. Currently, the only way around that trust is to be involved in pre-signing transactions yourself using multisig. Then you can be completely certain that unless you choose to sign one yourself, no other valid transaction spending a coin in a different way can be created. The problem is the more people are involved, the more difficult and unreliable coordinating everyone to pre-sign a transaction at the same time becomes. Past small sizes, it becomes a totally impractical problem to solve reliably. CTV gives a way for people to know a set of transactions is committed without everyone having to get online at the same time to sign them. It greatly simplifies the coordination process by allowing everyone to get the needed information to anyone else wherever they can, and once that person has everyone's information, they can then create the chain of CTV transactions without anyone else's involvement. And everyone can verify and be certain that the correct outcome is the only possible one. That is incredibly valuable on its own, but CTV can also enable even more valuable things in combination with other opcodes, which we will see in the next article. So in closing, CTV is a tightly restricted covenant that enables a degree of introspection and forward data carrying that is so limited it does not exceed the actual functionality of anything that can be done with pre-signed transactions. The value proposition is not in enabling new functionality in its own right, but drastically improving the efficiency, scalability, and security guarantees of what can be built currently using pre-signed transactions. This alone is a massive benefit to almost every currently deployed protocol using pre-signed transactions. Here are some of the projects demonstrating how thoroughly fleshed out and explored this particular covenant is compared to others. A basic payment pool example by STUTXO. A CTV Vault implementation by James O'Birney, who went on to propose OpVault, which makes use of CTV. There's a proof of concept port of the pre-signed transaction-based ARC implementation from Second by Stephen Roos to use the CTV instead. The Sapio language by Jeremy Rubin himself, a higher-level language for building contracts with CTV. There's Timeout Trees, which is a proposal for a very basic coin pool designed by John Law, and numerous other possible protocols such as optimized discrete log contracts, non-interactive lightning channels one party can open without the other, and even decentralized ways for miners to pool together. CTV is an incredibly mature proposal at this point with a high value add and no risk of enabling anything driving the concerns around covenants. This should not only be very seriously considered, but in my personal opinion, should have been activated years ago. Okay, that's the end of Shinobi's article. And yes, it is high level. And I get that. But if you, I'm reading this article word for word. If you really want to understand what covenants is, replay it. Replay it a couple of times. Shinobi does a really good job here. Yeah, his language does border on the too technical, but everybody can understand this. It's just going to take more people, more than one reading, or in this case, more than one listening. So do yourself a favor. Replay this. Learn what covenants are and how CTV seems to be probably our best shot at getting something like covenants in there. Now, the Circle P is open for business, and we're going to get clean with handmade tallow soap from my buddy SoapMiner. He's got peppermint tallow soap. He's got lavender. He's got pine tar. He's got tea tree. And then he's got something with no scent at all called rustic tallow. It's got, count them, 3 ingredients. Beef tallow, lye, and distilled water. And the rest of them have, like peppermint's got some peppermint oil or whatever. What is it? Yeah, peppermint oil. And then, and it's got some French green clay in it. And then there's lavender. It's got lavender oil and distilled water. Oh, and Brazilian purple clay for coloring. See how this works? This is clean soap. Not only is the soap designed to get you clean, it is in itself free from all of the crap that you get when you go buy soap at a Walmart. So go to SoapMiner.com. That's SoapMiner.com, SOAP, miner.com. And when you order soap from SoapMiner, in the notes field on your order form online, just tell them that you heard it here on the Circle P, and maybe under the value for value advertising model that is the Circle P, SoapMiner will decide to cut me some Satoshis for the advertising. On to the Japanese firm Metaplanet. They're issuing, or have issued, it's happened. They did it. They reported it today. $13.3 million in bonds to buy more Bitcoin. Adrian Zmunsky for Cointelegraph. Metaplanet issued 2 billion Japanese yen, or $13.3 million US of bonds to buy more BTC. According to a March 31st filing, that's today, Metaplanet issued zero interest bonds by allocating them via its Evo fund to fuel its Bitcoin appetite. Investors will be allowed to redeem the newly issued securities at full face value by September the 30th. The firm's CEO, Simon Gurovich, wrote on a Twitter post that the company was taking advantage of the recent downturn in Bitcoin prices. The announcement comes as Bitcoin changed hands for about $82,000 at the time of writing, down 25% from its all-time high of around $109,000 per coin. Metaplanet is Asia's top corporate Bitcoin holder and the 10th in the world, according to Bitcoin Treasury's data. Currently, the firm owns 3,200 Bitcoin, worth somewhere around $1.25 billion. Metaplanet is often called Asia's MicroStrategy, as its corporate plan closely mirrors that of Strategy, the U.S.-based market intelligence firm that shifted its primary focus to accumulating a bunch of corn. Metaplanet's U.S.-based older brother is the top corporate Bitcoin holder with over 500,000 BTC in its coffers, worth nearly $82 billion. And of course, as you know from earlier in the show, that number changed precipitously going north. Let's see, is there anything else in here? Oh, Metaplanet is making powerful friends in the United States political landscape. Now remember, this is a Japanese company. Earlier in March, the company appointed U.S. President Donald Trump's son, Eric Trump, to its newly established strategic board of advisors to further Metaplanet's mission to become a global leader in the Bitcoin economy. Quote, Eric Trump brings a wealth of experience in real estate, finance, brand development, and strategic business growth, and has become a leading voice and advocate of digital asset adoption worldwide. Well, okay, so that's the end of that article, but let me go back here. I need to look at this one again. This Hut 8 deal with Trump. Is Eric, let's see where Eric is. Oh my God. Eric Trump is the chief strategy officer of the new American Bitcoin company. And he's also doing stuff with Metaplanet. This is a busy Eric Trump. I got to tell you, man, he's a busy man. So what to say about Metaplanet? It's a Japanese firm, and they have a substantial amount of coin. They're clearly following MicroStrategy's play, but they're getting into United States political landscape by having Eric Trump as an advisor. So this is either ends up being really silly, and I'm not talking just about Metaplanet. I'm talking about the Trump family and whether or not they actually give a shit about Bitcoin. In my opinion, it can only go two ways. It can go really good, or it's just going to be a damn circus. Because my gut is screaming that Eric Trump does not know that much about this particular industry to be put in these positions. It bugs me, but not because has nothing to do with whether or not I hate or love Trump. That's not it. I'm just, this guy's wheelhouse is so far away from anything actually technical with Bitcoin that it makes me wonder, what is he doing for these companies? Hopefully somebody will be able to tell us soon. But in the meantime, Bitcoin miner Mara is raising $2 billion with a stock offering of their own to buy Bitcoin. Vismaya V writing for decrypt.co. The largest publicly traded Bitcoin mining company, formerly Marathon Digital, revealed in a Form 8K and prospectus filed with the SEC that it entered into an at-the-market agreement with major financial firms, including Barclays Capital, BMO Capital Markets, BTIG, and, of course, Cantor Fitzgerald, which seems to be a major player nowadays in this realm. The agreement also allows them to sell up to $2 billion worth of Mara stock from time to time, that's in quotes, with proceeds earmarked for general corporate purposes, including the acquisition of Bitcoin and for working capital. As of now, Bitcoin is trading at 81,416. Whatever. Analysts said that investors have been reacting to heightened trade war tensions and signs that inflation could keep inching higher. Well, we saw that in the inflation report that came out on Friday. Inflation is not exactly under control. So I could keep inching higher. No, the sentence is keeps inching higher. Still, investors appeared cautious. Yahoo Finance data shows Mara stock fell 8.5% on March the 28th to $12.47 as crypto mining stocks broadly declined amid macroeconomic uncertainty. The latest offering signals Mara's intent to double down on a treasury strategy that's rapidly gaining popularity among corporates, from GameStop's $1.3 billion convertible note plan to other big players like Similar Scientific and Japan's Metaplanet. The strategy was made famous by Michael Saylor. Yeah, we know, dude, we know. But last July, Mara CEO Fred Thiel did say that the company was going full hodl, and that's a quote, committing to retain all mined BTC and even periodically make strategic purchases on the open market, end quote. The SEC filing comes just weeks after Mara reported record earnings for the fourth quarter of last year, with revenue climbing 37% year over year to $214.4 million and a net income jumping 248% to $528.3 million, despite a 27% drop in BTC production due to last April's halving. Rising Bitcoin prices helped Mara beat expectations with a $1.25 in earnings per share. Holy crap. I mean, I don't like Mara, but those numbers are solid freaking numbers. So I guess good for you. Let's run our own numbers. Futures and commodities, woo doggy. Oil is up, way up, like 3.25 percentage points, taking it over 70 to $71.63. That's a hell of a jump. Brent North Sea up 1.5% to 74.76. Natural gas up almost a half, back over $4 to $4.08 per thousand cubic feet. And gasoline is also up 2.15% to $1.25. No, I don't know why I said that. $2.28 a gallon. Gold with another all-time high. It is an all-time high. 1.23% for the shiny metal rock puts it at $3,152.40 per ounce. Holy smokes. Silver is down a half. Platinum is up well over 3 full points. Copper is down 1.7%, and palladium is up 1.7%. Ag futures, what do we got here? Looks completely mixed. Biggest winner today is wheat, 1.94 to the upside. Biggest loser is going to be lumber, down 1.4%. Live cattle down 0.66%. Lean hogs up almost a half, and feeder cattle down a third. Now, what's going on in equities? Well, the Dow is the only one in the green today. It's up a third, but the S&P is down a quarter. NASDAQ is down over a full point, and the S&P Mini is down a third of a point themselves. And we've got fluctuations in Bitcoin right now. We are chilling out at $83,390. That is a $1.65 trillion market cap, and we're only going to be able to get our hands on 26.5 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,844,410 and a third of, and average fees per block are lower than normal. 0.03 BTC taken in fees on a per block basis. And guys, there's only 3 blocks. There's only 3 blocks, and one of them's not even full yet. And high priority is going to get your transaction in at 3 Satoshis per VByte. Low priority is at 2. And just because I missed it, there's just under 5,000 unconfirmed transactions waiting to clear. All right, but wow, so miners just refusing to shut down their machines. Hash rate is at 832.8 exahashes per second. Still very, very high. It's amazing. In fact, in July, on July the 1st, we had a hash rate of 600 exahashes per second. And then we get over into November and we get this spike up to 753 exahashes per second. That was right before the start of November. And then let's get over here to where around the time that we knew Trump was going to be in office. We hit 694. And then, let's see. But he got in January the 20th was Inauguration Day. So I'll pull it back to January the 20th. I'm looking at, if it'll be still, 836 exahashes per second. All right, and then we rose up a little bit, and then we came down a little bit, and now we're over what our hash rate was when Donald Trump got elected, and then we went to $109,000. We were at 100. We were going back and forth between 100,000 and 99,000 for a while, and then we had this big, huge, 20% drop, and we are now where we are now. Yet hash rate remains the same. I find that fascinating. But from Blood Red Streets, Friday's episode of Bitcoin, and I got Will with 5,000 sats says, permaculture also helped me see Bitcoin's value. I think the Permi crowd is probably the second largest demographic on Nostr as well. I tend to agree there, Will. Oak Grove with 1,064 says, didn't listen yet, family in town, but you won't be disappointed. Turkey gave me 1,000, said nothing. Psyduck with 573 says Psyduck. God's Death 237, thank you, sir. No, thank you. Paul Sir 9 with 500. Thank you again for this excellent and concise overview of current news. Always a pleasure listening to your episodes and the variety of topics. You're my favorite podcast when it comes to Bitcoin, and I appreciate your dedication to provide people like me with episodes that are consistently worthwhile listening to. Keep up the good work, my friend. Thank you, Paul. Kind words like that are worth their weight in gold. God's Death 237 says, thank you, sir. No, thank you. And Permanerd says, this episode is more valuable than a cheese reserve. That's the weather report. Welcome to part 2 of the news that you can use, and this is a weird one. This is out of CoinDesk, written by Helene Braun. Bitcoin could threaten dollar's reserve currency status. And you're saying to yourself, well, David, we've heard that before. Yeah, but not from BlackRock's Larry Fink, you haven't. That's not some idiot walking around talking about the dollar reserve being knocked on its ass by Bitcoin. This is one of the heaviest hitters in finance that the West has ever seen. And he's still a big fan of digital assets. BlackRock CEO Larry Fink nevertheless said that he's not blind to the possible risks to the U.S. from Bitcoin's rise to prominence. Quote, the United States has benefited from the dollar serving as the world's reserve currency for decades, said Fink in his annual letter to shareholders. Ooh, but that's not guaranteed to last forever. If the United States doesn't get its debt under control, if deficits keep ballooning, America risks losing that position to digital assets like Bitcoin. I'm obviously not anti-digital assets, Fink continued, quote, but two things can be true at the same time. Decentralized finance is an extraordinary innovation. It makes markets faster, cheaper, and more transparent, yet that same innovation could undermine America's economic advantage if investors begin seeing Bitcoin as a safer bet than the dollar, end quote. Fink's letter comes at a time of high market uncertainty and anxiety among investors about the economic state of the country amid policy changes set in place by Donald Trump. To balance out the national deficit, Fink said, investors should diversify their portfolios to add private market assets in addition to stocks and bonds. Doubling down on his commitment and belief in digital assets, Larry Fink said that he believes that tokenized funds will be as well known among investors as exchange-traded funds, provided that the industry can create a better infrastructure for digital identities, which Fink believes to be a hurdle in getting institutional investors from fully embracing decentralized finance. Quote, every stock, every bond, every fund, every asset can be tokenized. If they are, it will revolutionize investing. If we're serious about building an efficient and accessible financial system, championing tokenization alone won't suffice. We must solve digital verification too. End quote. Yeah. Wow. Okay. So digital identification kind of scares the piss out of me when it comes out of the mouths of people like Larry Fink, because their idea of digital identity is not a sovereign view. It is more of a prison guard kind of view. Hey, who's in cell number 18? Oh yeah, it's Donnie. Donnie's in cell 8. See, it's more of a prison ID card when you're talking about digital identification coming out of the mouths of people like Larry Fink and anybody who's in government, no matter whether they're in the United States or, God forbid, Europe, which just seems to be burning right now with, I don't know. I read a couple of things earlier today, like Marie Le Pen has been convicted. She was found guilty of embezzlement, and now she can no longer run as president. And I saw there was 5 or 6 different stories, all out of Europe, all about people that somehow or another are not going to be able to run for president, or somehow or another has been thrown in jail or been found guilty. It's bad, and it's going to get worse. But digital identification, when we just step back over here across the pond, back to the United States, and just think about what digital identity means to these guys, they are not talking about like a private public key pair like we have for Nostr. They are not talking about, like what John Carvalho, when he talks about digital identities, because he has a schema for it. He doesn't like the Nostr schema. That's okay. What I'm getting at is that John is a sovereign. He has a sovereign mindset. They're not going to be adopting John Carvalho's system. They're not going to be adopting digital identity as laid down in Nostr. They are going to want something much more sinister. So when this guy talks about Bitcoin and then he starts talking about digital identities, we probably need to reevaluate just how sinister Larry Fink actually is and stop rah-rahing him just because he's into Bitcoin. Anyway, FTX is on the horizon come May 30th. So the bankruptcy, Wonderkind, the guy that Curly had to do that they sent to prison because he stole a bunch of money from all his customers. Well, FTX will begin reimbursing its primary creditors, not all, just the first guys on the list. And that's going to begin on May the 30th, according to Atlas21.com. FTX is preparing to begin reimbursing its primary creditors on May the 30th, according to court documents and a Bloomberg report. The exchange will start reimbursements for creditors with claims exceeding $50,000, drawing from its $11.4 billion liquidity reserve. Andrew Dietrich, the company's attorney, emphasized that FTX is managing an extraordinary number of claims, many of which are fraudulent or inflated, totaling what he referred to as 27 quintillion claims. Holy crap. Some smaller creditors classified in the convenience class have already received their reimbursements. All claims related to digital assets are being evaluated based on the date FTX filed for bankruptcy, which was November the 11th, 2022, if you have forgotten. Although FTX has stated that many creditors could receive up to 118% of the value of their claims in cash, critics argue this figure does not reflect the price increase of Bitcoin and other cryptocurrencies that have occurred since that collapse. Major cryptocurrencies such as Bitcoin, XRP, and Solana have seen significant increases since the filing, and Solana has risen by 650, and they talk about 2 other shitcoins. I don't even care. However, since claims are being settled at November 2022 fiat values, many creditors feel shortchanged. Sunil Karvuri, a representative of a group of FTX creditors, said, quote, "This leads to some closure, but the recovery is based on outdated prices. The creditors are not fully compensated in terms of cryptocurrencies," end quote. FTX will also pay an annual interest rate of 9% on outstanding claims. Although reimbursements represent a step forward, the entire process could extend for months as the company works to resolve remaining claims and closed the books on one of the largest bankruptcies in cryptocurrency history. BitGo and Kraken have announced their involvement in assisting FTX's reimbursements. If all eligible users submit complete claims, FTX could distribute around $16 billion in total recoveries. So there you go, man. So why is this important? Well, I seem to remember that FTX has already liquidated everything. They've sold their Bitcoin for cash. They've sold their shitcoins for cash. As far as I know, unless I'm horrendously wrong, that liquidation has already happened. However, in news cycles, you cannot depend on people understanding that that has happened. They're going to see FTX claims going out, and they're going to just think that it's going out in Bitcoin, and that the people that get those reimbursements in Bitcoin are going to sell, and you see what I'm getting at. Now, if I'm wrong, and they are actually going to give out the coinage itself, but it doesn't make sense, because then you'd be able to sell it at today's prices, and that wouldn't be a tangible argument that guy was making in the article, right? So that's one of the reasons why I'm pretty sure that they've already liquefied everything, and that was done a long time ago. Still, you're going to see downward price pressure on Bitcoin and broader crypto once those payments hit, because you're going to have every magazine and every newspaper under the sun saying, oh my God, it's going to be a shitpocalypse. If the price is going to, Bitcoin's dead. It's going to die. Once these things get out into wind, everybody's going to sell. It's already sold, man. And yet people are going to freak. So just please, please, please be aware. All right, let's see. We got one more for you from Lightning News, written by Kurubai. He has this one entitled, Earn Bitcoin on Your Desktop. Smiles web app supercharges SAT stacking. I've never heard of Smiles before. What is it? Smiles, the trailblazing platform that turns daily tasks into tangible Bitcoin rewards, has unveiled its all-new Smiles web app. Designed for desktop users, this feature-rich platform revolutionizes how individuals accumulate Bitcoin by integrating shopping, surveys, and exclusive offers into a single intuitive interface. With enhanced flexibility, real-time tracking, and cross-device compatibility, Smiles is redefining what it means to earn Bitcoin in the modern digital economy. So, Bitcoin's rise as a decentralized store of value has sparked global interest, yet many still view it as inaccessible or exclusive to traders. Smiles challenges this narrative by empowering users to grow their BTC holdings organically through activities that they already engage in, like online shopping, sharing opinions, or exploring new products. The launch of the Smiles web app marks a pivotal expansion, merging the convenience of mobile rewards with the functionality of desktop browsing. So the key features of the Smiles web app are 1. Effortless cross-device integration. 2. Bitcoin cashback shopping, partnering with top brands. 3. Paid surveys where you can turn your opinions into Bitcoin. 4. High-value offers. And 5. Real-time earnings dashboard. 6. Bitcoin News Hub. Stay informed while you earn. This is interesting. The integrated news feed aggregates updates from trusted sources and Smiles' editorial team. From regulatory developments to market analysis, users can stay informed without leaving the app. Interesting. And 7, and finally, customizable interface. They'll give you a dark mode. Honestly, at this point in time, if you've got an app and you don't have dark mode, I'm not using it. The white backgrounds hurt my eyes. It's like and especially at night, because a lot of us like to be up at night. And one thing that sucks when you're up at night and looking at a screen is that everything else around you is dark, and you've got this. It's like staring into a headlight, or if you've got two screens like I do, staring into two headlights. I don't want to do it. If you don't have dark mode on your app, whether it's mobile or not, I'm not using it unless it's absolutely critical. All right. So please, if you haven't put dark mode on your app, please, for the love of God, do that. All right. That's the end of the show. We are here. So now like 1066 or 1065 is in the bag. It is. Yeah, it absolutely is in the bag. So donate to the show. So the call to action here, help me help you stay informed about Bitcoin news on mostly a daily basis. You can use the Fountain app or any podcasting 2.0 enabled app, and you can just stream me Satoshis while you listen. You can set it to, I think Fountain app's limit is 10 Satoshis per minute. I think I haven't seen 1 or 2 or 3 or I haven't seen any single digit payments flowing through my Lightning node, which is where all of my, whenever you donate to the show in Satoshis, it's always coming to my node. I don't use a third party to custody my node. I do it all myself. It works just fine for me. And I haven't seen single digit per minute streaming Satoshis in quite a while. So I think everybody went to a 10 Satoshi minimum. But if you just set it to 10 Satoshis per minute, turn it on, and just listen to the show, you're actually supporting the show physically. And I'm receiving those sats in my hot little hands without anybody between me and you. That is a personal relationship that you and I have, and nobody can stop it, right? If you want to throw me like a whole bunch of sats at one time, dude, throw me a boostagram. You can do that on any podcasting 2.0 enabled app. I use Fountain. Fountain is my daily driver. I love that thing, and it looks like it's about to go into an upgrade. I am on the testing. Well, I've asked Oscar Mary if I could be one of the people to test the new version, and he has agreed. So I get to get the new version, and I get to report on any kind of bugs or anything like that. But that Fountain app is highly stable. If you're looking to get a new podcast app, and if you're using one of the old ones, what are you doing? You got to get a podcasting 2.0 app. You won't get chapters, you won't get transcripts, you won't get all kinds of neat stuff, and you also don't have the ability to support this show, the Bitcoin and podcast, directly with your sats and the push of a button, and write me a message. You know, say that you want me to say hello to your son or something like that. I'll read it. I don't mind. You guys have been awesome with your messages lately, and I want that to expand. I think that that's an important part of the show, because you don't get that with like highfalutin podcasters, man. You gotta have a pleb-based podcast like me. So I do hope that you will consider supporting the show. Donate directly to it. Oh, and I've got a website. I finally pulled the trigger and got a domain and set up a web page, or like a couple of web pages. You can find this show at Bitcoin and Show, all one word. Bitcoin and Show. It's like the show. It's my show. It's the bitcoinandshow.com. bitcoinandshow.com. I've only got a couple of posts. I'm not a web guy. I'm not good at it. Okay. So I'm learning as I go. This is one of the reasons why I didn't really want a web page, but everybody's like going, no, dude, you gotta have a web page. So if you do go to Bitcoin and Show, I've got only 2 posts up there right now. One is Friday's show, Blood Red Streets. And then last night I posted an article entitled Brewing Biology, a novel system for biochar, compost tea, and microbial inoculation in plants and soils. I've been kind of had this idea in my head for quite a while. Go read it and let me know what you think. It's under construction, but I like the way that the article has been framed out, and I'm going to be working on that for a little while. But give bitcoinandshow.com a spin. And no, I don't have a donate button directly on the website yet. Give me some time, man. I'm working on it, and I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.